If I tell you that one coin has been quietly building strength on the higher time frames while everyone else is distracted by noise, would you believe that its next impulsive leg could already be in the making? Let's break it down step by step. This is Shah, and today we are looking at virtual. The current price of virtual is around 0.86. When we zoom out to the weekly time frame, the very first thing that stands out is the long and sustained downtrend the coin has been stuck in. Week after week, the sellers controlled the structure, pushing the price lower and lower. But then something changed. Out of nowhere, we got a strong impulsive candle toward the upside. That candle did not just appear randomly, it actually broke the weekly trend line that had been holding the coin down for a long time. A clean breakout is always our first signal that momentum is shifting. But as we always say, breakouts without retests mean nothing. Price came back down to check whether the breakout level was real or just a quick fake out, and this is where things get interesting. When price returned, it tapped directly into a very clear demand zone, sitting around 0.75. That zone held perfectly. The bleeding stopped exactly where buyers previously stepped in, and that tells us that this area is not just random support. It is a zone institutional traders usually defend because they have large orders placed there. From the weekly time frame alone, the direction remains upside as long as the weekly demand zone around 0.75 is respected. As long as candles continue to close above that area, the bullish structure remains valid. Even if price wicks below temporarily, structure stays bullish if the weekly body closes above it. Now, let us move to the daily time frame. Daily structure looks cleaner and easier to track. The main resistance we are watching is around 1.162. Price has not touched that level recently, but the space between current price and resistance is wide open. When a market moves inside a clear range between a firm demand zone below and a clean resistance level above, it often prepares for an impulsive move. The important part here is that buyers reacted exactly where they needed to. The strong rejection candle at daily support tells us buyers are active. As long as daily candles continue forming higher lows above the weekly demand zone, we can expect continuation toward the resistance. If the market gives us a gradual staircase pattern of higher highs and higher lows, the probability of tapping the 1.162 resistance becomes stronger. Once price reaches that level, we will decide the next directional move depending on how the reaction forms. A clean breakout with 2 daily candle closings above the resistance would confirm the next bullish expansion phase. For now, the direction remains upside, structure is valid, demand is respected, and momentum is slowly building up again. If you want an update when virtual approaches the main resistance or forms a fresh structure signal, just let me know and I will break it down for you.